Let's go to the second part here. This is important as well, and that we've been trying to make people understand. The extent of covering just the deposits is in some sense the least, the least objectionable part of the bailout. Let's go ahead and put this up there on the screen. So given the new Federal Reserve bailout, the big four US banks have now gotten a $210 billion federal bailout. How? Because the Fed's new facility allows banks to borrow against the negative collateral value that is shown here at par instead of at market value. So once again, they are able to borrow at par on their securities and assets instead of the losses that they rightfully should take on assets that they bought purely in order to increase the amount of capital to cover their deposits. That is a bailout. There's no other way to describe it. Effectively, the Federal Reserve is saying you do not have to account your business in the same way that every other business on the planet has to because you're too big to fail.
Yes.
That is the greatest gift that we can try and expound is when the feds, and specifically the Federal Reserve here, are allowing these accounting gimmicks to take place at all of these banks, they now operate fundamentally different than any other business in the entire country with a massive advantage and gift. And there is no current regulation, there is no current law, Krystal, that they cannot use this to this tremendous advantage and they can't pay themselves out bonuses tomorrow. They could pay themselves out bonuses in 3 months. The ability to survive is everything in business. So if you survive this and then you start making tremendous profits, you think they're gonna pay any of this back? Like you think they're gonna pay some sort of fine or anything? If anything, they're just gonna pass on the FDIC fees to all of us customers, and then they will increase even more of their profits, and they're gonna either pay dividends out, or they're gonna buy back their own shares, or they're gonna pay themselves out big bonuses.
Yeah.
This is bullshit, like when you really think about it.
Yeah, that's right. I mean, I think Zeitlin said it really well yesterday when he said, sometimes you can get lost in the semantics of like, okay, what's the taxpayer dollar, where are they going, who's funding it, et cetera. The bottom line is a gigantic benefit and gift has been given to the entire banking sector in a way that, we never see the machinery of the federal government jump to when it's the interest of working class people that are on the line. So not only do you have the speed of action, not only do you have a sort of shock and awe, overwhelming force of the action, but you have all of the machinery in place to make sure that these wealthy, well-connected individuals are always taken care of at a moment's notice. And I think that is just incredibly clear from what we've seen and the speed with which we've seen it. If there was even a whiff of a potential problem for these individuals, Biden was convinced over one weekend to take dramatic action, turning the banking system really on its head, and again, not demanding a single thing in return. So that is the bottom line here. The other piece of this, and let's go ahead and put this next piece up on the screen from the Wall Street Journal. All right, so the Fed had been engaging in this policy of monetary policy tightening, hiking interest rates, with the stated explicit goal of crushing wages and spiking unemployment, okay? Now, let's keep in mind that the actions that the Fed and the president just took were in the opposite direction when it was the jobs of a certain group of Silicon Valley entrepreneurs and their employees. Well, then they had to make sure there were no job losses. But the overall policy remains, we need higher unemployment and we need lower wages. Okay, so they are getting ready to decide what they're going to do in terms of a rate hike, rate decrease, or keeping things the same. The Wall Street Journal headline here is Fed's magical accounting might save banks, but doom rate increases. They go on to say there are plenty of lessons for investors in the collapse of SVB and other banks. So now there's a big question about, okay, well, so this entire bailout is, goes in the direction of monetary easing. So it's the polar opposite direction of what the Fed has been trying to do in terms of getting inflation under control, although we've discussed on this program ad nauseum, how the Fed hiking rates is an incredibly blunt tool that doesn't have any guarantee of success at even getting inflation under control. Is going to be very painful for a lot of people, especially if they spark a recession. And lo and behold, thus far, their moves have not actually gotten inflation under control. And, we still stand that risk of a recession. So what are they going to do now? The analysis seems to be kind of all over the map. I've seen some people even saying, oh, maybe they're going to actually not only stay in the same place in terms of rates, maybe they're actually going to go in the polar opposite direction because they're worried about banks and their financial soundness. Maybe they're going to continue on the path of rate hikes, even though this is like directly at odds with these other actions that they just took. Maybe they're going to just keep rates where they are right now and see what happens. So it's really pretty up in the air now of what the Fed is going to decide to do.
Yeah, I think you're right, Krystal. And let's go and put this one up on the screen. Right now, the market still expects the Fed to go through with rate hikes. But the fact that the question is even in their minds over here also shows you how fundamentally unfair the system is. Whenever the rates start to go up and threaten the balance sheets of the big banks and the too big to fail institutions, then we're allowed to rethink the policy.
Right.
Whenever small businesses like ours and across the country are getting crushed by rate increases and can't take any loans if they want them, when all of the viewers of our show are literally unable to buy a house because the mortgage rates are at the worst time that they've been in like 50 years, when you consider both the price increase, the housing market is a disaster, whenever everything is slowing, unemployment is happening, or at least is happening to the extent that they want it to, or even increasing rates because they want the jobs numbers to go down. It's not a question. This is the only thing that makes them pause and think, yeah, maybe that we won't increase the rates. I think you're right, though. I mean, I just don't know. I do feel like they're probably going to increase just simply because of what the jobs numbers were yesterday. But they may not go as far as they originally were going to before this crisis began.
Maybe they did 25 basis points instead of 50 basis points. That seems to be what the market is kind of pricing in. But, I think the important point is the one you made, Saagar, that they are actively trying to cause unemployment nationwide with their policy. But then when it's this one group that's well connected and has some very loud and influential voices to advocate for their interests, then they do a U-turn and go in the polar opposite direction.
Yeah, there you go. So look, system is rigged. I guess that's a common theme of the show.
Yeah.
Trying to explain exactly. I know it can get complicated with the jargon and all of that, but just take away the very basic lesson. It's like they get special tools in accounting that are granted for them that no other business on the planet gets, and specifically no other workers concern is ever even factored into their minds. And that's the basics of it.
And we're not asking them for anything in return. Nothing. We're not tightening, least as of now, not tightening, nothing. They just get a bailout, and that's that. Hey guys, ready or not, 2024 is fully upon us now, and Saagar and I have been brainstorming ways that we can really up our game for this critical election.
Yeah, we rely on our premium subs to expand our coverage, to add staff, to upgrade the studio. We just want to give you the best independent coverage of this election, which is possible. So if you can help us out, become a premium subscriber today, breakingpoints.com, or the link is down here in the description video. It really means the world to us, and if you like what we're all about, this is the best possible way to keep us 100% independent, working only for you.